Hey, everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. And if you've been with us a while, you know what we do here. If not, well, what we do here is we talk about stocks, but not just talk about stocks. That's boring. We talk about how to profit from earnings announcements on stocks. So we do this each and every week right here. In fact, this week is the week of October 13th, 2025. And this is the beginning of Q3 earnings season. Yes, this week is dominated by banks, by major banks. And it is that whole financial sector going to be really the key to where the market goes this week. You think tariff talk upset the market on Friday? Well, just wait until the banks declare, and we'll see whether the market continues its run higher or whether it's really going to show cracks in the economy. We will see about that. So we are going to be setting market sentiment this week with all the banks. We're going to talk about them. We have a lot to talk about. And we're going to talk about our trade last week and also a new trade for you this week. So hang on tight. Let's get started. All right, with earnings season coming back into play, we do have a lot of stocks. Although there's not a huge number of stocks declaring earnings this week, we're covering over half of them. And what I'm going to give you here on Earnings Call is really some of the top tier opportunities to profit. Okay, so I've whittled down my list of 56, kind of narrowed them down to this group. And one unique thing stands out is that there are very few real volatile breakout, what we call breakout stocks. Okay. Now, before I get into what that is, let me remind you the chapter feature at the bottom of the video, because we talk about a lot of stocks sometimes, and today is not an exception. So be sure to use that feature if you need to. But we focus on two sets of stocks. We break them down into high volatile stocks. These are companies that are going to declare that have an average move after their earnings announcement of 10% or more. And on the right-hand side of the ledger, we talk about quiet stocks and stocks that just don't move very much, meaning they move single digits past their earnings announcements. Okay, so we're not really concerned with the overall trend. We just want to know what they do through that earnings announcement, and that's what we focus on. And this week is dominated by financials, and they are notoriously quiet, meaning they only have single-digit moves through the earnings announcements. So let's get to it. Let's start on the quiet side of the ledger. Let me give you an example of what a quiet stock looks like. This is Pfizer. Now, Pfizer doesn't declare earnings until the middle of November, okay? But I wanted to use this as an example because Pfizer is notoriously quiet. Not only is it quiet in between earnings announcements, okay, but it's quiet during and through its earnings announcement. Those announcements are highlighted with the ellipse, and you can see here. Look at the right hand side of the stock price there. I mean, this is in $2.50 increments. All right, this stock just does not move very much, and it doesn't move very much for earnings. So that with these, what we do is we focus on selling premium around earnings, meaning selling options. But we don't do that naked. We actually hedge them with other options. And the strategy is called an Iron Condor. That is the go-to strategy for this, is an Iron Condor. Okay. So we're selling a call and a put, and then we're buying a call and a put at further out strike prices. All right. So there's lots of education out there, including on our website at ewotrader.com. But there's all sorts of places you can learn about that strategy if you're not familiar with it. So let's get to our list for this week. And you can see that it's going to be highlighted really with the banks. There's a lot of opportunity within the banks, but there's a unique standout here that I'll get to a little later. That was probably a really good, I think is a really good opportunity. All right. But let's go down the list. So we'll jump over to my chart real quick, and we'll go through these. Now, you're going to hear the same story over and over again, okay? Because there's lots of banks, and they all perform about the same. So here's JPMorgan. We're going to start off the week with the biggest name on the block. They will declare tomorrow morning on Tuesday, October 14th, before market open. Okay. All these banks are going to declare in the morning, okay, before market open. So they will declare tomorrow morning, Tuesday, and the average move here, believe it or not, is around 4%. All right. This is a $300 stock, and it's only going to move around 3 to 4%. Now, could it move more? Sure, it could. But this is the kind of stock that really is ideal for selling an Iron Condor. It's up around $300. There's lots of options, option strike prices, and we can really get ourselves in position to sell some premium going into earnings. Okay, so that is JPMorgan. Guess who also declares on Tuesday morning? Well, that would be Goldman Sachs. Goldman Sachs will declare on Tuesday, October 14th, once again before market open, and the average move here is 4%. Yes, the average move after earnings for Goldman Sachs is just 4%. I'm not worried about the fact that this stock has gone from $600 to $800 in about 3 months. Well, that's a little longer, maybe 4 months. Okay. I'm just concerned with the day of and the day after the earnings event. Okay. And you can see that the daily moves here are really not very big, and that means earnings as well. So you can see a little gap up, but it might only move 4% higher. It might gap up 4% higher. It might gap 4% lower. Okay, but that's the thing. Another bank that declares tomorrow morning is going to be Wells Fargo. Okay, Wells Fargo will declare Tuesday, October 14th, before market open. Now, Wells Fargo, though, has an average move of about 6%. It is a little bit more volatile, as their book of business is just a little bit different than some of these bigger banks like Goldman and JPMorgan. Okay. And you can see a bit of volatility here, but we don't expect a big double-digit move for Wells Fargo. This is about, just under $80 on the stock. We can still do a nice Iron Condor, but it's all about, looking at the options data tables, selecting the strike prices, and then estimating what the break even is. How far away from the money is it? Is it 6%? Is it 8%? Is it 2%? You want to be definitely further away from the money than the average move on these. Now, another stock, BlackRock, they will also declare tomorrow morning. As you can see, it's going to be a very volatile morning tomorrow morning, potentially. Okay. But if all these stocks move their average move, okay, it's really not going to do much. Okay. The average move here is 4%. For BlackRock. So Tuesday morning before market open. Now, the thing about BlackRock here, yes, this is a decent Iron Condor candidate, but this is a $1,100 stock. All right. This is a high dollar stock. And I usually, for these, just because of where you have to, the distance between strikes, it makes the risk a little bit too much for average accounts. I usually like to watch a stock like this just to kind of gauge market sentiment. All right. As we continue along the list, we have Citigroup. And guess what? Citigroup declares Tuesday, October 14th, before market open. Same thing here. The average move for Citigroup is 5%. All right. So just a 5% move for Citigroup. This is a $96 stock. It has had a nice little run up and then has pulled back here recently. But again, I'm not worried about the overall trend. I'm just worried about what this is going to do through their earnings announcement. And they will have earnings tomorrow morning. All right, we're going to step away from the banks for just a moment. Talk about two stocks that aren't in the financial stock sector. All right, we have Domino's Pizza that are going to declare tomorrow morning as well. So that will be Tuesday, October 14th, before market open. The estimated move here for Domino's is 5%. Okay, nothing much. Now, this is key because we're getting into really the fourth quarter results are key for a stock like Domino's because obviously football season here in the United States. In the fall, college football, pro football, the baseball playoffs. There's lots of sporting events that where pizza is kind of a key player with a lot of social events around that. So we'll see how Domino's does through their earnings on Q3. That's what we face tomorrow. Q4 should be really interesting. And then the other stock that's non-bank related that I wanted to show you is Johnson & Johnson. They will have earnings tomorrow morning before market open. And the estimated move here, the average move is 4%. Now, the difference between estimated and average are sometimes one and the same. We look at what the market makers are pricing out for the estimated move of the stocks, and then taking the average move into account and just kind of seeing where those two land. Okay, so sometimes those numbers are interchangeable, and right now the estimated move for Johnson and Johnson is around 4% for that. Okay, well, guess what? We're going to advance to Wednesday now. All right, how about that? Wednesday morning before market open, we have Progressive. PGR is the symbol here. They will declare Wednesday morning, October 15th, before market open. The average move here for Progressive, guess what? It's just 3%. All right. Now, they've been in quite the downtrend here recently. Not too worried about the overall trend. But again, I'm more focused on, you can see what it did last earnings announcement. Let me zoom in on that right here. You can see that, look how quiet that is. I mean, nothing outside of really a daily range, okay, for Progressive. And although the stock has gapped down today and is trading a little bit lower, I wouldn't, that wouldn't really deter my interest in selling premium around Progressive as we go into the earnings announcement on Wednesday. Now we get back to the big banks. Bank of America. Bank of America will declare Wednesday, October 15th, before market open. Again, a lot of these stocks declaring before the market opens. The average move here is 5%. Now down here around this level at $49, Bank of America, this is a little harder to put an Iron Condor on. Not impossible by any stretch of the imagination. Not impossible, but sometimes you do run into whether strikes are $1 in increments or $2.50 in increments on some of these, and it can play havoc when you get around the $50 level. But it's still a great candidate, and it is a major bank, so I wanted to include it in our conversation. Speaking of another major financial institution, we have Morgan Stanley. They will declare Wednesday, October 15th, before market open. The average move here for Morgan Stanley, look at that, another single digit, 4% for Morgan Stanley. All these banks, around 4 to 6% is all that they move. That's just not very much. The press might go, oh, it's up 4% today. Well, to an options trader, that's like, big woo. All right. Not really much. Now, if it was expected move was 6% and the stock gapped up 16%, that's a woo. That's a eyebrow raiser right there, and that would get our attention. But otherwise, it's a ho hum event, and that's why we like selling premium. $155 stock is ideal for looking at Iron Condors for this. We do these through a strategy, through a publication that we have called Delta Neutral Income over at ewotrader.com, and it's been cranking right along through these earnings announcements and doing these strategies. We do some other strategies in there as well, but earnings related Iron Condors are definitely part of the strategy in that publication. And once again, that is available at ewotrader.com. Then we have M&T Bank. All right, now as you can see, this looks very different from the other banks. Okay, a different animal with M&T. Okay, because their book of business is a little bit different. Really volatile here recently, but that's non-earnings related. Okay, this bank will declare on Thursday, October 16th, before market open. They like doing it before market open. The average move here is 5%. So even though this stock has shown a little bit more volatility lately, and what I'm talking about is look at these, especially these two candles here. So the candle Friday and the candle last Monday, they're much bigger than the average daily ranges. Okay. So, I would be very careful with this. There might be some underlying news that might be announced with it, but still, great potential here, trading at $182 for that type of strategy. Okay. And then we have Bank of New York Mellon. They will declare on Thursday, October 16th. Guess when? before market open. You guessed it. The average move here is about 4%. Okay. This is a $100 stock, a little over $100. And you can see it's much different than M&T Bank. Okay. Definitely in an uptrend, slight pullback right now. Ideal for going into that earnings announcement. $100 stock. Love doing Iron Condors on a $100 stock. All right. So we're expecting a nice quiet move for Bank of New York Mellon. And then one that a lot of people in the trading world are using is Schwab. They will have earnings on Thursday. Okay. That's October 16th before market open. And this is on the high side of the financial institutions. It will have an average move of about 6%. Okay. They will have that to report on Thursday. Okay, and you can see, stock's not really, it's showing a little bit of volatility, but not much. I mean, really a $5 range between 92.5 and 97.5 here. Kind of, I would say there are the averages, and since really July, and not much going on there. So look forward to seeing what Schwab has up their sleeve for their earnings announcement later in the week. Okay, we're getting down, kind of turning the corner on some of these financials and getting in later into the week. We have here Fifth Third National or Fifth Third Bancorp. All right, they declare Friday morning. That's October 17th before market open. And still, the average move here on Fifth Third is 3%. Okay, so on the low end of the financial range. Very quiet bank. And you can see the last earnings announcement back here in July. Look at that. Just very little movement after the earnings announcement. And that's exactly what we look for on these types of stocks. American Express, they will declare Friday as well. Friday morning, October 17th, before market open. And American Express, they have an average move of just 4% as well. Okay, and you can see the previous earnings announcement back here. The stock did gap it down just a little bit, but that was only about 2 or 3% for a $300 stock. Okay, the stock is trading at $323.90 right now, and again, good candidate for doing those Iron Condors. All right, and we'll finish out the financials and finish out the quiet side of the ledger here with State Street. State Street will declare on Friday morning. Okay, that's October 17th before market open. And State Street has on the higher side of the move for these banks, it is an average of 6%. Okay, 6% move. So all those stocks that we talked about are what we call quiet stocks, meaning they have single digit moves. That's great for selling premium around those. The reason is implied volatility gets higher. As we go into the earnings announcement, that implied volatility does affect the option price. It makes options more expensive. And as a seller, that means we get a bigger credit for that. And then after the announcement, that implied volatility crushes, and that's how we make our money in the trade. All right. Okay. So let's then jump over to the other side of the ledger, where I actually do have two candidates this week, and that's it. And of those two candidates, they don't move very much. All right. So let's take a look at the other side of the ledger. Let me give you an example of a volatile stock here. This is Akamai, and Akamai does not have earnings until November, but I wanted to highlight this stock as one of my favorites to trade. What we trade here is straddles and strangles. We do buy option premium going into the earnings announcement because these stocks often move more than the average or expected move that the option market makers are pricing into the options. And that is how those trades make money, is when they exceed the average move or the expected move. Okay. And so that's why we do straddles or strangles. Yes, we buy premium, which is often more expensive, but the trade-off is that we get the bigger move, and implied volatility does not impact in the money options when these go in the money, and that's how we make money on the trade. Okay, so Akamai is a big double-digit mover each and every time, and unfortunately, these aren't really good candidates this week. Okay, so let's start the week with with our candidates. We just have ASML and Interactive Brokers. So we actually do have a financial on the list. But as you're going to see, there's not really much we can expect from these. So ASML Holdings, they're going to declare on Wednesday, October 15th. Well, guess when? Before market open. The average move here is just 11%. Okay, just 11% through the earnings announcement. You can see the gap. Okay, the last earnings announcement here, we're up here at 822, and then dropped down to 755 after the earnings announcement. Then had some follow through to the downside. But here's the thing: while this is a straddle or strangle candidate, it's a $980 price for the stock. That is an incredibly expensive straddle or strangle. So for this, I would just watch it. Okay, it's very expensive to trade this, and for a stock that only moves barely double digits, not worth the time. So I'd be very weary of that. So AMSL Holdings would be really one to watch. And then Interactive Brokers, okay, if you're not familiar with them, high-tech financial company, actually the sixth largest I believe they're still in the top 10 in the U.S. So they have an expected move or an average move here of 11%. So Interactive Brokers will declare Thursday after market close. Hey, we actually have one that's going to declare earnings results after market close for one. Okay, so they declare Thursday, October 16th, after market close. And the average move here is about 11%. So again, not one of the big movers like we see moving 15, 18, 20% or more like we do get sometimes. But guess what, folks? Those are coming up maybe as early as next week. So you will want to come back each and every week over the next several weeks, because this is just the beginning of earnings season. Next week, we get into the hundreds. This week, we had 100 companies, maybe 101. Declaring earnings this week. Next week, hundreds, multiple hundreds, okay, declaring earnings next week. And then after that, even more declaring earnings. All right, so it's going to get very busy, and you're going to want to tune in each and every week as we talk about these stocks, and not, did they beat their estimates? Okay, are their revenues increasing or decreasing? As an option trader, don't care. Okay, I'm just looking at the expected move of the stock. What is its average? And that's how I'm going to profit from that earnings announcement around that stock. Okay. All right. So each and every week, in fact, let's take a look at the list once again. All right. This is not an all-inclusive list by any stretch of the imagination. This list is comprised of just some of the better opportunities out there. All right. Yes, there are other companies in other sectors. Okay. For example, Taiwan Semiconductor, TSM is having earnings this week. But guess what? Their expected move is their average move is like 9%. Okay. It's a semiconductor company, but its average move is single digits. So yes, it might move bigger this week, but right now it's not pricing for that. All right. And really the banks were the real focus, because we're going to want all eyes on the banks and the banking sector for this week. All right. Okay. So each and every week I do provide a trade alert for you. And we have been on an incredible run. I know for weeks and weeks and months, we've been having winning trades week after week after week. And finally, we've run into a loss. Yes, a loss. So let's talk about it. All right. So let's take a look at our trade from last week. It was on Delta Airlines. It was a straddle. And Delta has an average move of around 11 to 12%. So that's all I needed it to move. The straddle was being priced around 8%. Okay. And sometimes the option market makers get it right. All right. And this stock, all right, it went through earnings and it only moved 7%. And then it retraced. Okay. So it was not good for us. If we go and take a look at how we did in the trade, okay, we actually suffered a loss. Now, the percentage basis, it looks like a big loss. Oh no! Oh my gosh! 33.5% of my investment is gone. Okay, but in reality, that loss was $163. $163 was the loss on this trade. Why? Because our debit was under $500 and there was plenty of time left in the trade. So you combine those two together, and with the move, you can see the two red candles there. The stock actually gapped up near the upper break even of our trade and then sold off all day. So what I wanted to do was wait one more day in case we got a bounce, like we're doing today in the market. Market sold off hard on Friday. Today we're getting a bounce. Sometimes these stocks do that, but no. Delta went ahead and had a follow-through down day on Friday, and that's when we closed it out. We're just going to go ahead and, hey, take our save our trading capital. It's $163 loss. That is easily overcome. In fact, the week before, we made over $1,000 on our trade. Okay, we made over $1,000. If you want to go see, look at our previous video. We made over $1,000. So being able to take $163 loss, not a problem. All right. So what do I have for you this week? Well, we're all talking about banks, but I did find a good opportunity that wasn't in the financial sector, because you don't want to necessarily put all your eggs in one basket. But I did want to go back and look, and I was surprised to see that the opportunity was once again in the airlines. All right. So our trade for this week is on United Airlines. All right. UAL. Now, United Airlines is going to have their earnings announcement. Let's see here, Wednesday. And they're going to have it after market close. All right. So they are going to declare after market close on Wednesday. And we are going to be selling premium because implied volatility is elevated. We can get some nice premium off of this. And what you're looking at here is obviously the stock price on the left and the risk graph on the right. Focus on the black line. And every time the black line changes direction, that is where a strike exists. Okay. All right. So I can see here on the call side, there's a 110. It changes direction at 110. That's my sell strike. And it looks like 111 is the buy strike just above it. Okay. It's 111 or 112, and you can go price that out. On the downside, looks like around 89 or maybe 88. We sold and bought the 87 or 86 to hedge that sell strike. So the sell strikes are 110 and around 88. And then we only went $1 or $2 out and then bought those. And what I'm looking for is a calculation of max reward divided by risk. And there's a certain number I'm looking for. And that's what I provide for for our customers in our Delta Neutral Income and Delta Neutral Breakout publications. Okay. But this is our trade of the week this week. It is on another airline, United Airlines. And actually this strategy would have worked on Delta, but Delta was pricing out for a bigger move, and it didn't. And we suffered a little bit of loss, but we'll take that and we'll continue to move on because losses are part of trading and we manage them. And we managed it to just $163 loss. And now we're looking to make up that loss with this trade on United Airlines. All right, folks, that's our show for this week. Another earnings season is upon us. The Q3 earnings, starting off with all the financials. You're going to want to really pay attention to the markets this week, as well as consecutive weeks as the market and market makers and the analysts are going to really be looking for what's the overall commentary from the CEOs during their earnings call. That is the key. Okay, what is coming out of their mouths around earnings? And that is what everybody is interested in. So, folks, this is our show for this week. Everyone have a great trading week. Thanks for being here, and I will talk to you again next Monday right here on Earnings Call.